Please like, share, and subscribe.
Arise, you workers, from your slumber. All you wage slaves, everyone.
The revolution comes like thunder, and the age of hypocrisy is done.
What do you think we might reasonably expect as far as developments on the horizon go in relation to the problems of finance and asset price inflation that you two address in your work? We'd be interested to hear your thoughts about the shorter term and the longer term. Is there anything to mention about Trump administration's policies in this connection, specifically with regard to actions or policies that intend to keep asset prices increasing? Is the future of the dollar system or BRICS bound up with those problems?
Yeah, so if I could start on that, the basic dynamic is that assets which have no supportive role for productions are inflated. Of course, real estate does have a supportive role for production to a degree, but the prices of real estate have increased way beyond that. So it's not possible to rationalize the increase in real estate prices by reference to their importance for the productive structures. And the same is true for stocks, and the same is true for many other assets. And this dynamic is that assets which are really divorced from the productive structures, they can actually increase much faster than other assets. I mean, if you think about tangible capital assets, it's not really possible to increase their price so fast. It's especially financial and real estate assets where you can do that. And financial assets can be created at the stroke of a pen or with a keyboard. And so this dynamic has found a new outlet in crypto. Cryptocurrencies are basically nothing. My students have been pressing me for years to also lecture on crypto when I teach banking and finance. And I've always resisted that because I said, crypto is called cryptocurrencies. I said, that's wrong. It's not a currency. It's not money. We can talk. There's always very complicated stories about ledgers and about the ways that it is created in very energy intensive ways, but it's got nothing. It's not of any monetary interest. However, Trump, by politicizing crypto, is making it politically relevant, and is clearly inflating the market again. I mean, I think since 2018, the crypto market has inflated and crashed 7 times. So we're now looking at the 8th time that it is being inflated, probably much more than any time before. And so this dynamic is just continuing. Also, his pressure on the Fed to decrease interest rates that would of course be a boon to leverage investments. So I see no end to this in the short term. In the long term, as Michael's analysis, particularly building on Ricardo, has shown, in the long term, this is not a sustainable development. I don't mean ecologically unsustainable, but financially unsustainable, right? So debts that cannot be paid will not be paid. And you can roll them over and you end in a Ponzi scheme. But a Ponzi scheme, there's one thing certain about a Ponzi scheme, mathematically certain, that it will crash. And so whether it will be a soft landing, as they say, or a hard crash, nobody can predict. But in the short term, it's worsening. And in the long term, it will have to come down and it will be very painful.
Well, the only thing that I can add to what Dirk has said is to focus on some of the things that Trump has done to make things much worse, besides making a few $billion for himself in crypto. One of his proposals, his tariff act and his economic wonderful budget deficit act has led people to worry that the economy is going to be inflated over the long term. So despite the fact that Trump is now in a legal fight going on today in the courts to try to gain control of the Federal Reserve Board to lower interest rates, the interest rates he's talking about are short-term rates, not and the short-term rates. And basically, you borrow short-term to make an arbitrage gain by buying long-term assets. But the long-term rates are going to go up because foreigners are moving very rapidly out of uh, long-term U.S. 10-year bonds and especially the 30-year bonds, because they say if America is going down this path of the Republicans and Trump, we're going to have a big inflation, and that's going to mean negative interest rates over 10 or 30 years. So while low short-term rates are going down, long-term rates are going up. That's making it much harder for the average American family in the 20s and 30s to buy homes. And there have been charts on home ownership by 20-year-olds, 30-year-olds, 40-year-olds, 50. And the 20 to 35-year-olds have been going down and down and down. They can't afford it. And the home ownership in the United States has been shrinking relative to absentee ownership. So the census publishes data on this, and there's because private families joining the labor force cannot afford to take out mortgage loans with their student debt and the credit card debt and the auto debt and things. This leaves the market open to absentee ownership, buying real estate for all cash, because that yields more than you can make. And of course, the private capital companies themselves are very highly leveraged, putting as little of their own cash as possible. So you have a debt pyramid financing all cash purchases of real estate to avoid having to pay the high mortgage rates that owner occupants would have to pay. Well, the other thing that Trump has proposed is to privatize the Federal National Mortgage Authority, Fannie Mae. And Freddie Mac. These are the government agencies that have bought mortgages from the commercial banking system, packaged them, and sold them to institutional investors, guaranteeing the payments. Well, Trump wants to privatize this because he's talked to his Wall Street donors, and they say we can make much more money than the government's making by compensation for risk, because the risk is going up now that you're having default rates and arrears on mortgages and other debts rising. Let's privatize Fannie Mae. Well, that means that the rates are going to go up even more for mortgages, accelerating the concentration of real estate ownership in the hands of absentee owners for all of this. And the final, regarding crypto, there are almost weekly exposés of how much money Trump and Melania have made personally by underwriting their own crypto. You issue crypto in the first few hours, there's a huge immediate influx by Trump's supporters and insiders to buy it. The public joins in. I want to support Trump, and then the insiders sell, and the supporters of Trump all lose their value. And Trump says this is a great model for the economy. We can base the whole economy on this. And he wants to begin. He's pushing the banking system to not regulate the crypto trade. If you regulate it, they can't cheat people. And crime is the most lucrative business for the last 2,000 years, probably. So, government, if you regulate crime, you've crushed the engine of economic growth. I'm exaggerating for effect, but you've seen what happened with the crypto fraud already. Everything that Dirk says about his fears about it are I share.
Wow, this seems like a good topic. We should stick to this. I don't know if I have a question. Dirk, do you want to add anything?
Well, we could of course, and more about conditions in the U.S. and Trump and crypto, the U.S. crypto market maybe than I do. For me, it's really interesting that the theoretical side of this, right? So crypto is the manifestation of a theoretical tendency. Michael's written about this, Bronze Age economics. there's a lot of scholarship that shows that market economies and capitalism, especially, we can talk about the difference, but I'm sure you're aware of it. Capitalism has an inherent tendency to instability, and that tendency is located in the financial markets. So Marx thought that the instability of capitalism was down, capitalism would collapse. But Minsky, who was a Marxist, who studied Marx extensively, and who was a student of Schumpeter at Harvard. So this is the American economist Hyman Minsky, who worked from the 1950s to the 1990s. Minsky said that the instability of capitalism is upward. So there's an inherent tendency of capitalism for what I've called debt shift. So for debt, for liquidity that's created by debt to shift away from production into non-production, into asset markets. Okay, and all that it needs for this to happen is deregulation. Nothing actively needs to happen. It's already inherent in the capitalist financial system and in the capitalist economy at large. And so what we see now and what we've seen over the last 40 years is that dynamic. We've seen it also in the Gilded Age, and then there was a long interregnum of the so-called mixed economy, of course, the Depression, World War II, and then the mixed economy model, where the state and regulation, zoning restriction on banks, interest rate caps, and so on, had a much larger role. And we didn't have a financial crisis until the late 1960s again. But actually, crisis is the normal stage, and instability is the normal state of capitalism. So that's why it needs to be continually regulated. So I'm really more interested than crypto. I'm really more interested in the mechanisms which are unleashed by deregulation, of which crypto is one of the many, many manifestations, just as the mortgage market was the latest manifestation.
Well, quite right. What's really at issue is, what is capitalism? Most people think of it as industrial capitalism. That's what Marx talked about. And Marx actually was an optimist about industrial capitalism. He thought, yes, it would develop into monopolies, but it would develop, this would lead it to develop into socialism. That was his optimistic idea. And he thought, as industrial capitalism evolves into socialism, we're going to get rid of all of the rent seeking. We're going to get rid not only of land rent, but monopoly rent. And banking, in his day, banking really was becoming productive in Germany. Where the banking and the government and heavy industry, largely military to be sure, the banks were in Germany were very different from the English and American banks. They did not press for heavy dividend payouts. There was no thought of stock buybacks to make money. They actually were pressed, no, keep reinvesting the money in more and more expansion. And that was the German model. And I've described all of this in Killing the Host. So if you look at Marx's optimistic view of industrial capitalism becoming industrial socialism, that's what China did. And what China did that the socialist movement has dropped. It's funny. Many Marxists and many governments, I won't name them, call themselves Marxists, but they've never read Volume 2 and Volume 3 of Capital, where Marx describes the kind of financial dynamics that Minsky described and Dirk and I have described. Well, China solved this by saying we're going to not permit the financial sector to be privatized any more than we want economic rentier income to be privatized. If there is economic rent, which there's always going to be a rent of location, making some properties better situated and more desirable than others, then this is going to be the social base. And obviously, China has not been very has had problems in that area in the last few years, but at least it's kept the financial and banking sector, money and credit creation and its allocation, in the hands of the People's Bank of China instead of Goldman Sachs.
you.